Hello and welcome to another video where we talk about the crypto world. The past several days have been tough for the crypto market. 3 crypto-friendly banks have collapsed over the past week. As a result, the crypto market's capitalization tumbled below $1 trillion. On the bright side, Bitcoin has conquered the $26,000 high. In fact, the digital asset headed to a new high back on Tuesday, right after the release of US inflation data. It even surpassed resistance to hit a weekly high of $26,407. However, at the beginning of the reporting week, Bitcoin went down. On March 9th, Bitcoin attempted to consolidate slightly below $20,000, but then dropped to a weekly low of 19,600. During the weekend, the pair was seen in a consolidation stage. A brief rally began afterward. Early on Thursday, Bitcoin again fell to 24,900. A surge in the flagship cryptocurrency was striking. Indeed, right before the rally, Bitcoin had been through a prolonged crypto winter, and its outlook was quite gloomy in February. These days, on the back of a crisis in the banking system, many investors turn to digital gold. Notably, the purchasing power of crypto depends on traditional banks as they get liquidity from fiat. Therefore, in the current situation, Bitcoin behaved not like a currency, but like an asset, according to some experts. True, in the wake of a banking crisis, the premier digital asset incurred losses. However, the greenback tumbled as well. If we compare the chart of US dollar to that of Bitcoin, we can see that after Sunday both assets were bearish, then peaked and again edged lower. With fresh news and data coming, volatility only goes up, affecting price charts. On Wednesday, the US dollar index consolidated at around 104.7. Both the greenback and equity markets show a strong reaction to the US Federal Reserve's rate hikes. In recent days, currencies and stocks behave unusually. For instance, the US CPI report turned out to be less optimistic than markets had expected. That is, core inflation exceeded forecasts. This is a clear indicator of an aggressive Federal Reserve. On the other hand, the meltdown of Silvergate Bank, Signature and Silicon Valley Bank has fueled speculation that the regulator could pause hiking rates for some time. After all, the banks collapsed because of substantial part of their funds was invested in government bonds, which dropped in price every time the Federal Reserve raised interest rates. The banks were simply out of liquidity. For instance, Silicon Valley Bank even had to sell $21 billion worth of securities to raise cash, which resulted in an after-tax loss of $1.8 billion. No wonder the Federal Reserve, the Federal Deposit Insurance Corporation, and the US Treasury had to step in to protect deposits and the banking system. Anyway, while those who bet on Silicon Valley Bank are looking for a way out of the situation, the Coinbase crypto exchange can breathe a sign of relief. Yet this is going to be a temporary relief, as the cryptosphere seems to be going through a rough patch in the near term. For instance, crypto investors are clearly not happy about the US president's budget proposal. Joe Biden intends to reform the tax code and close tax loss harvesting on crypto transactions. Moreover, the crypto industry is now under the watchful eye of regulators. As the US is looking more deeply into regulating crypto companies, KuCoin became the target of the New York Attorney General, who filed a lawsuit against it for failing to register as a securities and commodities broker-dealer and falsely representing itself as an exchange. Thus, the US is tightening its grip on stablecoins, refusing to acknowledge them as money. As a reminder, the battle between the US Securities and Exchange Commission and Ripple of the status of the XRP coin has been ongoing for over 3 years now. The firm's CEO Brad Garlinghouse believes in a victory and has never doubted that XRP is a cryptocurrency. Meanwhile, XRP has lost about 5% over the past week and plummeted to the 0.3597 low from the 0.3775 high. The second largest digital asset by market capitalization, Ether, has lost about 0.8% against the dollar over the past 4 weeks. Since February 10th, the price has broken through the key resistance at $1,500, $1,600 and $1,700. Demand for Ether remains buoyant. In addition, with Ethereum's Shanghai upgrade, the $28 billion worth of staked Ether will soon become available. Users will be permitted to withdraw staked Ether in the first quarter of 2023. Some analysts say it could happen already on April 15th, a tax day in the United States. Investors have been unable to withdraw Ether tokens since December 2020. When the Ethereum network transitioned to proof-of-stake, users who agreed to lock up any amount of Ether were promised a reward of 3 to 12% per year. By the way, Katie Wood was recently praised Ethereum and other crypto networks that stood the test of the banking crisis. The founder of one of the fastest growing investment companies in the world took to Twitter to criticize the US banking system. In fact, Elon Musk is on the same page with her. Having such influential supporters, digital money can still compete for a place in the sun. Moreover, the challenges of the world's leading banks seem far from being over. Yesterday, Credit Suisse lost 31%. Several bank stocks were also temporarily halted from trade due to the steep losses. Our weekly review of the crypto market is coming to an end. Have a profitable trading week, and until next time.